Good morning, and welcome to episode 246 of Getting Rich. I'm your host, Rich Chekin, president of Asset Strategies International, and today is Wednesday, October 15th, 2025. The U.S. brokered peace deal between Israel and Hamas took center stage this past weekend with the release of hostages and the signing of the historic peace deal in Egypt with all parties concerned. Hopefully, this will end 2 years of open hostilities in the region between Israel and Hamas. In the U.S., the trade war with China is escalating. The U.S. has accused China of playing games with rare earth exports, rare earth metals exports, and as a result, has imposed another 100% tariff on top of existing tariffs to China. That situation continues to spiral out of control. In the meantime, gold continues to make new highs, and silver, for the first time since 2011, has made a new all-time high. It's breached the $50 level, and it's up 70% on the year. Of course, this is triggering some concerns about a supply squeeze with diminishing silver supplies in London facilities. Let's go ahead and take a look at the numbers and see the impact on metals. It is significant across the board. Gold's up 4% over the past week. It trades at $4,200.90. It was $4,037.90 last week. Silver's up 7.3%, trading at $52.60 an ounce this morning. It was $49 an ounce last week. Platinum up 0.5% or $8 to $1,670 an ounce. It was $1,662 an ounce last week. And palladium, the big winner, up 12% to $1,584 an ounce. It was $1,414 an ounce last week. With gold outperforming, with silver outperforming gold, the number of ounces of silver it takes to buy an ounce of gold has dropped, and for the first time in a very, very long time, below the magical 80 figure. It takes 79.87 ounces of silver to buy an ounce of gold this morning. Last week we sat at 82.41. And the US dollar is virtually unchanged. It's trading at 98.89 on the index. It was 98.82 last week. So I ran some numbers past you last week, and I've got a new one here for you this week. Ray Dalio is calling for 15% allocation to gold in your portfolio. Bank of America overnight came out and said we're predicting $5,000 an ounce gold and $65 an ounce silver next year in 2026. And of course, I shared the numbers with you last week about Morgan Stanley. I kind of want to revisit that. So Morgan Stanley, blue chip brokerage, has got $4.8 trillion in client assets under management. They've changed their allocation in their portfolios. So instead of offering 60% stocks, 40% bonds, they're saying you ought to hold 60% stocks, 20% bonds, and 20% in gold. That's a big ask in terms of the amount of gold. If every one of their portfolios makes that switch, and of course that's not likely, but if they did, 20% of $4.8 trillion under management is $960 billion going into gold, 240 million ounces, or 7,465 metric tons of gold. I just want to put that in perspective. Over the past 3.5 years, all right, most of gold's gains is attributed directly to central bank buying. They've been buying at a clip of about 1,000 metric tons a year. So that's about 3.5 metric tons have been enough to make gold hit new all-time highs for years over the past 3.5 without investors really even participating in this market. If Morgan Stanley buys 7,000 metric tons of gold, that's more than double what the central banks have been buying over the past 3.5 years, which has caused the market to go to new highs. There's no question, folks, this is going to have an impact on the market. My question to you is, how high do you think That will push gold and silver, because let's face it, silver's moving now because investors are finally starting to get in this market. So where do you think gold and silver are moving? I'm pretty sure it's up. The question is by what magnitude? As always, we want you to go ahead and subscribe to our YouTube channel. You can do so right down in the comments section. Like us, send us your comments. Subscribe to our social media. Subscribe to our twice weekly, always something interesting alerts, and our once monthly information line newsletter. But in the end, don't ever forget, getting rich starts with keeping what's yours.